before the tariffs were announced, there was already significant risk that the treasuries could go higher. And that's why I said, we could have a situation where we're in a recession and still have treasuries higher because of the potential of inflation and the impact on our debt, because the debt's already so high. So the debt's really the issue that makes all these other things so dangerous, because our U.S. government debt needs treasury rates to be lower. It needs the Fed funds to be lower, but it also needs the treasury rates to be lower.
Alrighty, folks, we are going to do a 2-part series. I guarantee you one of these is going to piss you off. In this series, we are going to do something that we've never done before. In series 1, the one you're watching right now, we are going to talk about how Trump screwed everything up, how his strategy is harebrained and terrible. And then in episode number 2, we are going to flip the script and say Trump is a genius. The reason we want to do this is because we want to be intellectually honest. I think it is fair to say that there is opinions on both sides that are valid, that we should talk to. We should actually look at and say, hey, if this is true, how can we profit from it? How can we protect ourselves? What might be the downside or the upside of said activity? We are doing the negative one first because both Anna and I have been called Trump lovers a lot more than we have said to have TDS. And yes, folks, in the same video, some of you have called me a Trump lover, and then some of you have called me, I suffer from TDS. So I must be doing something right if I'm pissing both people off. But at this point, Anna, let's get after it. I've actually set my clock for 22 minutes. So we give each time, actually 22 minutes. Here we go. All right, we've started. Anna, you're first. Again, remember, this one is Trump did everything wrong. So what is the first thing that you think of?
I think that coming out of the gate after talking about tariffs being basically reciprocal, whatever you tax us, we will tax you. Saying that out in the gate, but then coming out on tariff day at the beginning of this month saying, we have a new formula. And basically it's significantly higher than what a reciprocal tax was. Instead, they figured out, what is the trade imbalance? How much do we import versus export? They divided that in half and rolled out extremely high tariff percentages that absolutely shocked the world, shocked the countries, shocked the stock market, shocked the bond market. And we started to have a meltdown because he set an expectation. And then the formula that he used was so crazy high tariffs that everybody thought, is Trump crazy? Is he serious? Is he just bullying to get us to come down? Or is this going to last, and how long? And the shock of the uncertainty at a time in our country where there's already so much uncertainty was too much uncertainty for countries or markets to bear. And I think it was a huge mistake of him to do it that way.
Yeah, I agree with you. I'm glad that one came up first. I mean, we were ready for reciprocal tariffs. And oh, by the way, reciprocal has a definition. Yes. I pay you, you pay me, right? And then to bring out that board, from Kinko's or wherever it was, that showed, 49% and, just these asinine numbers. There's nothing reciprocal in there. So either A, they should have chosen a different word, or, I don't know, but I totally agree with you. Kind of on that lens, the thing, if you really want to think about doing it wrong, is he went after everybody at once.
Yes.
Right. You certainly could have had a strategy that was more measured. You could have tiered people. You could have went after China hard, and then, hey, here's a tier 1, 2. Like we're gonna go to our partners, our friends first, and we're gonna work something out. And second, this, that. There could have been a more measured and thoughtful and responsible path, because right now, I mean, think about Scott Bessent, right? Because you go shock and awe. His phone has got to be blowing up. And how do you negotiate? We're talking trade deals. I don't know much about trade deals, but I'm going to guess they're really complex.
Absolutely. And part of what has been so surprising to me is just the timing of it all. On one hand, Trump knows that he's got 2 years to push through all of the major changes that he wants to push through. And we'll talk about some good things about that on the second video. But because he's got 2 years before you have a lot of Congress being reelected, and potentially changing to where he doesn't have full control of both the House and the Senate to push through his agenda, he's trying to come out and do it all at once. And that can backfire. And part of the issue, to your point and to my point both, of trying to drastically change things is all of that's going to have some uncertainty. But historically, when you have countries that have the level of debt to GDP that we already have, that creates a lot of internal conflict, a lot of, the haves and the have-nots, a lot of far right-wing, far left-wing arguments about everything. But the risk of that is if you also have external conflicts hit at the same time, wars, right? Threats from Russia, threats from China, threats from Iran, all the things that you're seeing going on. When you make enemies of your allies at that time, I think that's a mistake. And so, to your point, he didn't just come out and say, hey, let's hit China. China's the real target because they're the ones undercutting our pricing on everything, and essentially making manufacturing of stuff here leave. So China's really his target. But to go after, Canada and Mexico, when he's the one that actually renegotiated NAFTA with them in his first term and say it was an unfair, horrible deal, and we're going to go after you for doing what I brought to you as our trade agreement, at the same time that he's gone to Europe and said, hey, right or wrong, we're backing off of supporting your national security. You need to put more money in. You need to step up in the issue with Ukraine and Russia. He already shocked our allies with that, to then come out to all of our allies and say, we're going to hit you with significant tariffs way higher than what we've agreed, way higher than reciprocal. My concern here, Michael, is that you make enemies of those that you need to be your friends, and you significantly increase the potential for external conflict, not just trade wars, but if you look back at history, trade wars have often sparked hot wars, military wars. And he's doing it at a time where if you alienate our allies, when you've already got threats from China, maybe wanting to go after Taiwan, Iran and Russia and the alliances of the BRICS nations, I think it's really dangerous to make enemies of our allies, even if you think the world order needs to change, trade needs to change. I think this shock and awe, I think it could backfire, Michael. I really do.
Yeah, along that lines, in same thought, I mean, the thing that I think was the biggest unintended consequence, or maybe not calculated, is the U.S. brand. The brand of the United States has taken a drastic hit. You are seeing foreign friends start to reallocate capital, right? And again, I'm not saying people are going to dump the dollar and dump treasuries. That's not what I'm saying. But they're going to go from an 80% allocated U.S., 20% rest of world to 65% U.S., 35% rest of world. And those allocation tweaks are enough to create some real damage, to the plumbing into treasury rates. I mean, you can go and listen to Ray Dalio, talking this weekend about something worse than a recession. Frankly, Sri Kumar, I think he's from Bank of America, is talking about 6% 10-year and 9% mortgages. Those are all possible if the reallocation is broad enough and big enough. We could have damaged. I mean, think about what happens to the economy with a 6% 10-year mortgages, commercial, small business loans, credit cards, auto loans. It could be destructive. And again, he hit the brand. It's like the NFL. They always say, protect the shield, protect the shield, protect the shield. That's like their first thing. Don't do anything to damage the brand of the NFL. We have, in one fell swoop, in one 10-minute session, damaged the U.S. brand. And I don't think we've seen the full ramifications of that.
Yeah. And, I've been talking about this, and we've talked about it on several shows, including last week when we talked about stagflation. Before the tariffs were announced, there was already significant risk that the treasuries could go higher. And that's why I said, we could have a situation where we're in a recession and still have treasuries higher because of the potential of inflation and the impact on our debt, because the debt's already so high. So the debt's really the issue that makes all these other things so dangerous, because our US government debt needs treasury rates to be lower. It needs the Fed funds to be lower, but it also needs the treasury rates to be lower, because the interest that we pay on treasuries that demand higher yields is going to be higher and higher and just continue to add to that debt. So I was already very nervous about the fact that one of the things that damaged the US brand, I mean, let's be real, most nations already feel like we've bullied them and we've started wars that we shouldn't have started. Under multiple administrations, left and right, we've been the bully on the block. We've just not been as blatant about it as Trump is, with his mouth. It's been more kind of hidden from the American public, and a topic for another day. But when we put sanctions on Russia and we froze their assets and we froze the SWIFT banking system and we froze their ability to have control of the treasuries, that really was a big notch in against America. And it did rapidly increase the BRICS countries and many other nations to come and say, we cannot be beholden to the US anymore. We need to change the monetary system. We need to trade in other currencies. We need to buy less US treasuries. At the same time, when we started to struggle financially, even though we're kind of the cleanest dirty shirt in terms of, flight to safety, there is, because of the debt, this fear that not only could the US freeze our treasuries, and so central banks slowed down buying treasuries and started stacking gold, and talking about the currencies. But now they're saying, is the US going to default on the debt? And if they do, we should demand higher yields. So there was already a pushing up of yields. And this is part of why, even when Powell cut rates last year, the treasuries went up about 1% for a half a point cut, right? Yeah. And so everybody's like, why? It's the US debt, dummy, right? Like that's the sign. But when you add all these other things, there's just a lot of uncertainty and a lot of distrust on our ability to still be that safe place, and our ability to not create disruption with weaponizing the dollar through sanctions. So you come out while that's already happening and you say, let me put the screws to my allies and to my enemies. Do you think that that's going to make them go, Uncle, we want your money? They're already saying you're being a bully with the sanctions under the last administration. Now you're being a bigger bully. And the last thing we want is treasuries unless you pay us a much, much higher yield. So if foreign countries aren't buying the treasuries and big hedge funds are nervous about all of this stuff. And by the way, deglobalization, which is good for the United States over time, potentially, is inflationary. It's going to cost a lot of tax dollars. It's going to cost a lot of spending to make it happen. And what if you have war? Now they're having to say, what if we have a real trade war that turns hot? That's extremely inflationary. And so all these inflationary risks, for him to come out so hard and aggressive and kind of that bullying, everybody into submission at a time that they're like, we're tired of catering to the United States. Yeah. And it was horrible timing in the way it was done. And I think it could cause a lot more damage that we haven't yet seen.
Yeah, a lot more is coming. Kind of along that lens, when I play that exact thought out, because I've had it as well, the other thing it does is it does open the door for your number one adversary, again, China. China right now, I'm sure they are. If they're not, they should be out trying to be friends with all of these places that we have pissed off. Saying, again, China's not playing a game to replace the United States. Again, this is about allocation and change of direction and change of percentages, right? If China can increase their exports 5 or 10% to other countries, that's a net win for them.
Yes.
Right. So again, you've given your big enemy a very easy opening to go, hey, yeah, I know you used to like those guys. Those guys are very nice. In fact, they're dicks. I'm a nice guy. Let me give you some of this candy, and let's see what happens. So again, we've given an opening to our adversary that could prove very problematic in the near term. Maybe not tomorrow, but we're talking 6, 9, 12 months. The whole reordering, and where China has friends, that list could grow.
Absolutely. Absolutely. And, one other thing, just to kind of have another point, I mean, they're all kind of related, but I'll say at the same time, it could be a mistake for Trump to be pushing tax cuts right now. As much as I like to save on taxes like everybody else, pushing tax cuts, pushing tariffs as a replacement for tax cuts for corporations. And so, one of the things that Dalio wrote in his very good book, Principles of Big Debt Cycles, and another
Yep.
Principles of a Changing World Order, they all were very timely, right? The last couple of years. But he says when nations get to the amount of debt that we have, really, you've only got a few solutions. And one is austerity, cutting expenses significantly, cutting programs, making the government smaller so that it can spend less. The second is actually tax increases. So in order to pay down that debt, you've got to increase your tax base. And Trump is kind of trying to do that, but he's trying to increase the tax base by some tariffs and then cut corporate tax rates and then make the others permanent. And so what that does is it creates more of a deficit for a time, at a time when you need to get rid of the deficit. So we can play devil's advocate in the second video, but I think it could be a mistake to try to go after tariffs at this time as a replacement for some of those permanent tax cuts, and then giving the corporations big tax cuts at a time when history shows us that the most successful way to get out of the debt is tax increases instead of decreases. He's trying to do that so that he can increase production, which wasn't a big point in Dalio's books. He's more like cut expenses, raise tax revenue, and then when you have to, inflate away the debt, allow more inflation, which is worst case for our countries. But Trump is trying to go after GDP, and he's trying to, do those tax cuts in order that corporations will start investing in the economy, even in a slow growth era. They'll start paying higher wages. They'll start bringing productivity back. So it could be a good thing, but it could also backfire and not be good that we have huge tax cuts at a time when the debt might indicate that we need tax increases.
Yeah, the other thing that's very interesting when you kind of play this out, you have to imagine that bringing manufacturing back to the United States, back to the heartland, back to the towns that have been decimated when manufacturing was exported, it's a fair question to ask who's going to do the work, right? We currently sit, I believe, at 4.1, might be 4.2% unemployment. I think it's 4.2. We have, historically low levels. We also are, we're removing folks that are illegals from the country, again, reducing supply of labor. So I think it's a fair question to ask who's going to do this. Does the U.S. public want to manufacture these things? Is it just going to be robots and, we're not actually, having more employment? So there is a lot of thinking about, do we want these jobs? Now, I would argue that, the heartland wants them. But again, I think that's a fair question to ask. It's not like we're sitting here today with 10% unemployment trying to find things for people to do, right? Unemployment is 4.2%. So again, sometimes you have to ask yourself, all right, great. I love the mission. I love the goal, but who exactly is going to do the work?
Yeah. And then is manufacturing the right way to go to create productivity in a world that's gone more and more technological? We had the great industrial revolution where manufacturing is the way we produce significant GDP. But then we kind of shifted to more, high-end white collar jobs. We've definitely been on the path to shift toward more technological innovation. And so, when it seemed like we were on the cusp of becoming a new revolution, being a new tech revolution, robotics, AI, and those types of things, is it a wise thing to try to go back and say, back in the good old days, and most generations do, we think, oh, it was so much better than when we had it that way. Back in the good old days, manufacturing was what it was. So let's make manufacturing the big thing again. Time will tell whether that's wise or whether the world is kind of over that, to your point, and saying, no, we want to be able to do more work and be more productive and be paid for it, but we don't want as much hard physical labor as what we had to do in the past. So time will tell whether this is a mistake or not. But to your point, do people want the white collar, good paying jobs, more tech stuff, or do they really want the more labor intensive work?
Yeah. So as we wrap up this first episode, we're almost out of the 22 minutes. It really comes down to me when you look at this, execution, which is now almost 2 weeks. It'll be 2 weeks tomorrow. It'll be 2 weeks on the 16th. This could lead to a lot of bad things. We may not have seen the bottom in the stock market, right? Earning expectations. We may see significantly more unemployment. We certainly could see a recession. Shoot, stagflation, again, is a real possibility, as you've been telling us for a while. We've damaged the brand. 10-year note could go to 6. We could reduce the number of allies. We can give an opening to China. This execution certainly has lots of downside risk. And I guess the last thing I'll say is, wrapping this up, is I'm not sure who to listen to. We hear almost daily communications from people in the cabinet, in the inner circle, that seem to be divergent.
Yes.
Dude, first thing, can I ask you all just get on the same freaking page? Because you're creating your own confusion day after day after day.
Absolutely. Yeah. The misspeaking, you've got Lutnick saying something about tariffs that's totally different than what Bessent is saying. And that's creating that uncertainty. And, we've talked about briefly before, and I know we need to wrap this up, but the stock market isn't really the concern. Everybody was talking about the Fed put for the stock market. It's the bond market. It's the treasuries. And that is where the smart big money is. And they need certainty. And so when you create a significant uncertainty in corporations, in hedge funds, and insurance companies, in countries that are buying bonds, you really rock the bond market. And if our enemies and our allies wanted to stick it to us, they'll just dump treasuries in mass at the same time, and rates will skyrocket, and it'll completely backfire. So the messaging isn't clear. Again, you can agree with, and I do agree with, some of the policies and things that Trump wants to do to get us out of debt and to bring productivity back. But if it's executed poorly and it creates anger and uncertainty at a time when we need calm, we need certainty, we need diplomacy, it's the execution that if history, points poorly on Trump's rolling out of all of this stuff and trying to create the order, I think it's going to be on the execution and the way it's done and communicated, more so than the policies themselves being as disruptive as what it might lead to.
Yeah. Folks, at the end of the day, there are certainly folks out there that believe this was the worst political error in 95 years. It's like shooting yourself in the foot or worse. And we tried to give it an honest assessment of all the things that could go wrong. What we are going to do in the next episode is we're going to flip the script and say Trump did it right. He had to do it this way, yada, yada, yada. Again, we are certain we are going to piss you off in this video or the other video, but we're just having fun trying to be intellectually honest. Anna, where can people find you?
Great. You can find me here on your show, on my playlist on your channel. You can find me on social media at Anna Kelly, REI Mom. And if you want wealth and real estate consulting or coaching, you can find me on my website, book a time with me at AnnaKellyInvesting.com.
Thank you so much. Stay tuned for the next one.